Okay, welcome back everyone. Let's get right into the stock market technical analysis. We're going to go through the charts, find the opportunity. All right, this channel is all about pointing out the opportunity before the rest of the herd knows about it. All right, and that's the key to making money in the market is you want to find the opportunities before everyone knows about it. When everyone finally realizes it, you're making money and they're chasing. So we don't chase on this channel. We look for opportunities in the beginning. Starting off with triple Qs, guys, tech sector, I think this is where the most opportunity lies for the next, weeks to months. I don't know the exact time frame, but I think there's opportunity to be bullish and long on tech stocks. Triple Qs is a tech sector ETF. Let's look at the charts and I'll show you guys why I continue to remain bullish. Again, the masses, the herd, is all bearish, and it's interesting to see how just on my channel, the comment section, if you look at the comment section, I'm getting all kinds of bearish comments. You know, the market's going a lot lower, everything's bearish, everybody wants to be bearish. Go back and look in January time frame of this year and see what those comments look like. I kept pounding the table over and over saying, okay guys, I'm getting short. Here's why. Here's why it looks good. Technically, we look like we're heading lower, and we did get short. And it's kind of the exact opposite now. I'm looking for I'm looking for a rally. I'm looking for a bear market rally. I don't think we're continuing a bull market. I do think we are entering and going to continue to be in a bear market, but I'm looking for a bear market rally, and that couldn't be a pretty strong impulsive rally. But most of the comments are bearish. Everybody's looking for more downside. So again, that's just the nature of, that's just the nature. The masses are always chasing typically, especially retail, and that's what I get here on my YouTube channel. Nobody wanted to be short back in January of 2020. Of this year. I mean, very few people wanted to be short. Most people just threw kind of catchphrases my way. The trend is your friend. Don't go against the trend, this and that. And yet that was the right move. And now it's kind of the opposite. Everyone thinks there's more downside. So just want to point that out. Now, looking at the charts here, triple Qs. We have to go down to the hourly chart to really narrow it down, but on the daily chart, I want to continue to point out bullish divergence. Boom, right there on the momentum indicator. So that tells me we have bullish momentum. All right, we are there. The momentum is bullish right now, at least on these momentum indicators. Price action isn't quite bullish yet, but or at least it doesn't really show up yet. But again, you don't want to wait to go long something after something explodes higher and then you're chasing that price action. All right, we want to see the signs as early as we can to forecast the next move. Looking at the hourly chart, look what's going on here. We have an uptrend here on the hourly. All right, this was the most recent low right here on January 16th, and we are trending higher. Now, we can't say for sure we have a uptrend because we haven't made a new higher high, but we're clearly making higher lows. All right, and yesterday, let's zoom into just a narrow time frame just to point out the price action, because it's important to recognize price action to tell you what's actually going on behind the market. Today or yesterday, they gapped down, boom, right to this trend line. It wasn't even really a trend line yesterday because we only had a couple reactions, but after yesterday, it was a pretty established trend line. We gapped down and buyer stepped in, boom, bid it up. All right, today, gap down, boom, buyers bid it up. All right, so there's buyers down here. The buyer, institutions are buying, they're accumulating positions on these moves down. They're taking that liquidity and buying into it. That's what it's telling me. So today, it's just essentially what's going on. And here's the other thing. The Fed is now projected to do a 1% interest rate hike. That's what the Fed futures is projecting. And that's kind of pricing in. That's, being priced in now. It's been priced in a 1% hike. I don't think they're going to do a 1% hike. I think they'll probably do a 75 basis point hike. But again, that's what the market's been pricing in. And yet tech is rallying. All right. Over the last 2 days, we gapped down and there's buyers here buying it up. So recognize that for what it is. Doesn't mean it's going to have to work, but I like the price action. All right, so the other thing we need to see, we've got kind of recent highs. Let me kind of clean this up right in here. All right, we've got highs right here. There's a high and kind of an equal high. We need to see a new higher high to really confirm this uptrend. So I need to see this rally up to here and then make a new higher high. All right, but again, I'm going long. I've been long. I'm buying the dips now on these breakdowns, looking for that higher high. By the time you get the higher high, then the masses will realize that we're in an uptrend and you should see, you know, a kind of a big move up. I don't want to be chasing that price action. I want to be buying the position down here at the key levels of support. Okay. And kind of scrolling through here. Yeah, that's basically all I've got on triple Qs. So this looks good to me. I think we're going higher. Targets on this one, you know, I think I mean, at the end of the day, it's probably this downtrend line right here, all the way up here at about 329, 330. That's the downtrend in this bear market that we've been in triple Qs. So I think we're probably going to see a rally up to there. Somewhere in that range is where I'd likely be looking to pull my longs and maybe flip short. And my preference right now is just to stick to triple Qs and not necessarily go into individual stocks. I definitely like, there's several tech stocks that have bullish setups, and I do like them, but I'm not loading up on positions in individual tech stocks right now, and sticking to the index, the ETF, triple Qs, primarily because we're coming into earnings season. So anything can happen in earnings seasons. You can get big spikes down, all that. So what I'd like to do is kind of clear through earnings season, at least on these stocks. And then once we get through that, we'll look at the charts and figure out which individual stocks have the most bullish setups, breakouts, things to look for where there's opportunity. So just to round it out, I like tech, and I'm sticking to the triple Qs ETF until we clear out some of these earnings. Okay, gold. So gold continues to break down, and you know, we're coming into some support here on gold bullion. Again, I've talked about recently where I thought, okay, the chart in gold doesn't look great. However, if we're going to see tech rally pretty soon, then it's likely because interest rates are going to come down. And I think there is a high probability that interest rates will start to come down. We saw the CPI reading come out yesterday, and it was pretty hot. And the Fed is now pricing in that 1% hike. So if that's a pretty steep hike. To me, it seems like we really can't get much more hawkish and steep, a steeper hike than that. So this is likely, from my reading, I think we're at the peak of this inflation scare, at least for the short term, or this might be for a year or so. I think inflation will continue to persist over the next decade. Is what I'm really thinking, but it's not going to last. It's not going to be just continuing to go higher and higher. It's going to abate a little bit. We rise, we abate, we rise, we abate. It comes in waves. So I think we're at the peak of this most recent wave. And the Fed if they're going to do that 1% hike, I believe will be the last hike for quite a while. Okay, they're likely going to pause after that. They're not going to cut, I don't think, but they'll pause. And the market will see that as a pause. It will be stimulative. So that's really what I'm going to be looking for in the future, is signs that I'm right on that thesis. It's really a fundamental thesis. Gold here, support is right there at about 1682. We should hold that. I really feel like we need to hold that. No divergences right now. We've got bearish momentum, and we've got a bearish price action. So in general, it's pretty bearish. The miners look a little different. The miners GDX here still has bullish divergence. There it is on the RSI, and there it is on the PPO. Now it's just barely hanging on. If we get much more downside, we're gonna burn through this divergence, but we are hanging on to it. And then looking at the daily chart coming off of we've broken that trend line. So this trend line support's been broken here. If we get some sort of a snapback recovery, this will be a bear trap. I think that's where it's going to go. But again, until I see it, it's bearish. The chart's bearish, at least in price action. We're below support. We do have bullish divergence, but being that we're below support, I need to see a recovery of that trend line to remain bullish. I'm not shorting the miners, but I do have some long mining positions, but I'm not adding to those right now. We'll just kind of wait and see. Today, maybe the makings of a reversal candlestick doji right there. We'll see how we close the day, but if they can close it here, that could be a doji. Look for confirmation. So again, I just need to see a confirming candle. A single day doesn't really help us. It does give us insight that we might have a reversal candle, but we need to see a confirming day. Another green day would be that confirming day. And if we get that, and especially if we can recover this 2777 area, then we have the makings for that bear trap. Okay, so again, bullish divergence on the momentum and potential bear trap, but nothing yet. All right. Oil kind of at support right now. You can see this trend line here on the oil futures. We've got, this is your October 2020 low. We've got support right here, and then you can see we're basically getting a reaction right here. So we're at support. Probably going to get a bounce here in oil. But again, oil, I still think oil is probably going lower and eventually going to break this trend line. But until you break, we're at support. Really, that's it. Oil has come off from the most recent high down about, it was down 26%. As of right now, about 22%. So that should get reflected in this CPI reading next month, which tells me that we're likely seeing the peak of this inflation reading. Now, if oil rallies here, if it can hold trend and rally and continue to move up, by the time we get into next month, we're at new highs in oil, then we're likely going to see inflation going to continue to persist. That should continue to put pressure on the Fed to hike rates, which should continue to put pressure on the market. So there is that potential that we have to watch for. Oh, another one I forgot to cover is the dollar, and that's a big portion of what's going on in gold. So the dollar's, up today, 0.5%. One pattern I'm looking at is on the hourly channel or hourly chart. We've got this bearish rising wedge. We had a breakdown and a sell signal the other day, especially right there, that hourly candle, and we ran up for a back test. So far, we're just back testing basically, but nothing's really changed. So I think we head lower in the dollar from here. And again, that's building on my thesis that I think gold is likely going to rally from around this level. And then the market should rally as well, because a falling dollar is bullish for stocks. So I'm looking for that. We need to see the dollar fall. The bottom line is we're right at kind of key pivot points for a lot of different things. And this is my trading strategy. I like to take positions at key levels. I want to be right near that level of risk. So if I'm wrong small. Okay, but technically I've got a case to go long tech right now. I still like gold, although I need a little more proof that, I'm not adding to positions, and we need to see a little bit more there. Need to see the dollar fall. That's what I have for today, guys. So drop me a thumbs up. Check out my stock market technical analysis course. I will not be putting out a video tomorrow. I'm taking off later this afternoon, and I will be back on Monday. So everyone have a great weekend and best of luck.